Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. We're going to be focusing on Wyckoff Accumulation. Was this the test that we've seen on Bitcoin's price action in recent days? Let's dive into the video. Subscribe to the channel for more videos like this in the future. This is the Wyckoff schematic on the 8-hour time frame, and really truly I thought that this was an invalidated schematic, at least on the 8-hour time frame, because a spring is supposed to take place and a test is supposed to take place at around these phases right over here at the bottom of these two phases, SC and ST, whereas we saw a lower low. So on the 8-hour time frame, I shared to Twitter that this Wyckoff accumulation range is invalidated on this 8-hour time frame. But if you look on the 4-hour time frame and you adjust the test to have been around here, and you're seeing the resistance over here, just adjusting a few things here, this is a correct Wyckoff accumulation. And the thing about this sort of adjusting and changing the time frames, adjusting which phases where, that kind of goes against the entire logic of TA. TA is supposed to outline certain parameters for you and help you just understand where price is, what the scenarios are, and where could we see price go next based on those scenarios and parameters. Whereas here, people seem to be, going to the 8-hour time frame, looking for Wyckoff accumulation. Then we see an invalidation, and then people start to look at Wyckoff accumulation on the 4-hour time frame, so trying to cherry pick. But I think the most important things here is, yes, perhaps we have seen a test here. This indeed does look like a spring, like I mentioned in a previous video. This does look like a test. Overall, we have to have higher lows continuing, higher highs and higher lows. And at the moment, we're not really seeing perfect higher lows, which is why I suggested that we have an invalidation of the Wyckoff accumulation range. But generally speaking, maybe we don't have to see picture perfect following of the schematic where we're seeing higher highs and higher lows constantly. Maybe we just need to hold certain levels which are really important to us, and that goes for the 31k area, which is in alignment with the SC and ST bottoms. Right over here, you're seeing a double bottom here. And so far, so good. And we just need to focus really on the range, just the levels, not necessarily the intra-range price action, because we can get quite easily confused. What we need to focus is on the range low holding. The range low is holding, so you can always make a case for Wyckoff accumulation, especially since we've seen a spring and this range low confirm as a support once again. So if we just pull back here and confirm this level, 33,000 as a support once again, then that could be a good case for just that transitional period from phase C to phase D. That's all there is to it. We really just need to hold these two areas, these two levels, 31k and 33k. And even if we dip back here, as long as we hold here, yes, that wouldn't be in line with this higher high and higher low schematic here, picture perfect following. But maybe we don't have to see theory truly match practice as long as we just hold these two levels, 31 and 33k. The most important thing to note here is that this recent weekly close is a bullish hammer, and a bullish hammer is a bullish trend reversal candlestick, which is quite positive. It's positive because if we just focus on this bullish hammer candlestick and focus on the previous bullish trend reversal candlesticks, then out of all of these ones, you're seeing that this has the longest downside wick, so the strongest reaction from the buyers, and this is probably arguably the most bullish candlestick of all of these. And the reason I compare to these ones is because, of course, this is the same range and the same support level. So this is the range low of the macro consolidation range, and this is the range high of the macro consolidation range. So we're just consolidating between 29 and 39k, effectively speaking. So we've been able to protect the 29k region last week, And the best thing about that is that we've closed above 32K, and we've also managed to close above 34K, which is great because we're reclaiming old levels that we previously thought we lost last week, and we're still keeping them as a support. But not only that, we're holding the multi-week daily higher low despite briefly wicking below it on 2 separate occasions, and in the process actually forming these 2 higher lows right over here. So not only are we seeing a multi-week higher low hold here, but also a multi-day higher low hold, and also the entirety of 2021 has been spanned by a higher low in of itself. So a story of higher lows on multiple different time frames, but nonetheless still holding. We've wicked below this higher low briefly, but we're turning it back into support right now this week. And the week is still young, lots can still change. We can even see downside wicking beyond here, but it's great to see that we're holding that support, holding this higher low nonetheless. And it's quite interesting to see that we've seen a multitude of higher lows hold for Bitcoin, but we're also seeing a really important higher low spanning the entirety of 2021 on Ethereum as well. So we're seeing cross-asset correlation through the lens of higher lows, generally speaking. Great to see that sort of cross-asset higher lows holding. So we're seeing some correlation between these assets, and Ethereum holding this higher low as well as Bitcoin. That's quite a positive sign for the market, not just Bitcoin, but also for altcoins, because as long as Ethereum holds this high low, altcoins do stand a chance of some recovery from here, as long as we maintain price strength confirmation here. But moving on, we're also holding onto the 50-week EMA, which is a valuable indicator in a bull market. I talk about this in a separate video, so feel free to check that one out if you haven't. This is a really important 50-week exponential moving average, a valuable support in bull markets, and we wicked below it. There was some threatening, some teasing that this 50-week EMA might be lost, but we're still holding it as a support, and that's the most important thing here. So this triangular market structure, price being sandwiched between the 50-week exponential moving average support and the 21-week EMA resistance, it would be ideal for price to return above this EMA, because that's what we really need to do to just reaffirm that we're still in the bull market. Holding the 50-week EMA as a support is still giving us some hope that we still are in a bull market, but what we really need to see is price deviate beyond the 21 EMA. And at the moment, we're still forming this triangular market structure. So consolidation inside this structure over here is still likely. We're probably going to consolidate here until we see price compression really influence price in a way that we'll see a break of either these 2 EMAs. Depends where we get that weekly close. Weekly close below here, below the 50-week EMA, and we're going to go lower. And conversely, 50-week EMA close here, and we're going to go higher. That's just how we look at confirmation signals and just trying to get in on a trend that's confirmed. And of course, this recent holding of the 50-week EMA means that we're still holding the series of lower lows in this downtrending channel. So soon we'll be able to challenge the 36K region, which is the diagonal trendline resistance of this downtrending channel. And this is an important channel to watch out for, because a case still can be made for Wyckoff distribution. As you guys know from previous videos, we're currently in this phase, arguably, in the distribution of through the Wyckoffian viewpoint. Breakout from here should take us to mid 40s, and this is where we should be watching out for resistance, because we might see resistance have some confluence with the pi cycle 111 daily moving average at 49K at the moment. So it is declining over time. Over the past few days, it's actually declined by a few $100s. So we might see that confluence. After all, depends how quickly we might see this breakout occur. A breakout soon, and of course this is going to be the next major resistance to watch out for, and then of course that 40K 49k region, that were the 48, 49k region, apologies, from the pi cycle top moving average resistance. That's going to be something to watch out for. But in any case, that's all for today's video update. Loads of bullish developments coming up here in price action. Great weekly close recently, so it's great to see support holding, valuable supports holding, and as long as we see this support continue to hold, then there is scope for bullish upside, especially if we see a break from this wedging structure right here. That's about it for today's video. Thanks so much for watching today. Subscribe to the channel for more videos like this in the future. Like the video if you enjoyed it. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.